Okay, good afternoon, everyone. Thank you again for joining our webinar, How to Cut, Contain, and Restructure Costs During Uncertain Times. This is the third webinar of our four-part financial management series presented by the Ontario Nonprofit Network and Imagine Canada. Thank you to the Ontario Trillium Foundation, Toronto Foundation, City of Toronto, and the United Way of Greater Toronto for making this webinar series possible. My name is Melanie, and I'm the manager of communications and network engagement here at ONN. If you're new to ONN, welcome. We are a provincial network that advocate for the 58,000 nonprofits across Ontario. We focus on public policy, advocacy, and services that strengthen our sector to be a key pillar of our society and our economy. If you're already a member of ONN, thank you so much. Our advocacy work would not be possible without your support. And if you're new to ONN, welcome. If you experience any technical difficulties during the webinar, such as a visual lag, we recommend that you close your browser and reopen it. If you're still having issues, please feel free to message us in the chat box to your right. Now, while we wait for everyone to get started, I'm just going to launch one last poll, which is about what you're looking forward to learning in this webinar today. Are you interested in learning how to use a team approach to examine costs to determine what costs might be cut back, contained, restructured, or even increased? Are you interested in discovering tips and traps to avoid when containing costs or deferring expenses? Are you looking forward to learning how you can identify expenses that you shouldn't cut back or delay paying and discover why? Lastly, are you interested in participating in a live question and answer session with our speaker, Betty Ferreira? So I'll just leave that open for 10 more seconds. Great. It's wonderful to see so many people interested in the different things we're going to be covering today. Now, we know that there's a lot of content to cover in this webinar. And there are going to be many questions, which is why at the end of this webinar, we'll cover some questions like we traditionally do, but we're also going to be doing a 1-hour live question and answer session on Twitter. You can participate by following along on Twitter by using hashtag NFPfinance and tagging Betty Ferreira on Twitter. I'll also write it in the chat box in case you don't know the spelling. Now, if you're not on Twitter, don't worry. You can submit your questions in the question box as well, and we'll make sure to get to as many as possible. Now, the most common question I get during the question period is, will you be receiving a recording? So yes, you will receive the recording, the slide deck, and you're also going to be receiving a great resource from Betty herself. This is going to come to you within 1 week of the webinar. Lastly, before we get started, I would like to introduce Laurent, the Manager of Government Relations and Advocacy at Imagine Canada. She will be completing our land acknowledgement and introduction of our main speaker today. Over to you.
Every time I forget I'm muted, apologies. So thank you, Melanie, for having me. Hi, Betty, so nice to see you again. So I recently moved back to Montreal, where myself and part of our team live and work. So I'd like to acknowledge that we are located on unceded Indigenous lands. The Kanien'kehá:ka Nation, commonly known as Mohawk, is recognized as the custodians of the lands and waters on which I am today. Montreal is historically known as a gathering place for many First Nations, and today it is home to a diverse population of Indigenous and other peoples. We respect the continued connections with past, present, and future in our ongoing relationships with Indigenous and other peoples within the Montreal community. And now it's my honor to introduce our main presenter today, Betty Ferreira. I've had the pleasure of introducing you before, and it's always so overwhelming to see the number of hats you've worn, roles you've taken on. So here I go. Betty is the founder, CEO, and principal consultant of Restructure Consulting and Good Casting, and is a management consultant and advisor to boards of directors with 28 years of experience. As a strategist, coach, trainer, speaker, Betty inspires social purpose leaders to adapt, prepare for, and create the future. Betty is the designer and sole instructor for the CPA Ontario Nonprofit Finance Leadership Certificate, a volunteer co-producer of the CPA Ontario Nonprofit Finance Annual Conference, a former member of the Accounting Standards Board of Canada Not-for-Profit Advisory Committee. Betty has a master's certificate, black belt, Lean Six Sigma, and has been a member of the Chartered Professional Accountants of Ontario since 2013. She received the designation of Fellow of the FCPA FCMA in 2018. And lastly, she's also been a nonprofit-driven speaker. So thank you so much for joining us today, Betty. On to you.
Thank you so much, Laurence, and thank you, Melanie. Okay, hello, everyone. As you may know by now, I am a former executive director, CEO of nonprofit organizations, and I was often hired as a startup or turnaround CEO. In 2005, I started Restructure Consulting, and in my 28 years of experience, I have worked with many nonprofits experiencing transformation, either because they proactively sought to transform and strengthen the resilience or impact, or because they were forced to due to external threats like COVID, SARS, government cutbacks, or a recession. And I believe that there was always one major contributing factor that made these turnarounds and restructuring strategies successful. And that one thing is mindset, and specifically the extent that these strategies focused on the solutions and the opportunity. Although the situations were often bleak, without opportunities in sight, we refused to see these periods solely as a crisis, but also viewed them as a period of opportunity. And at the center of this mindset is a belief that it's okay if the organization ends up looking different, smaller maybe, but we will make sure that the landing is the softest of landing possible and one that will position the organization to be as resilient as possible in the future and to, in fact, have a goal to rebound post-crisis. I offer this inspiration and aspiration to you should you be feeling as though things are looking dire right now, or that they may become dire in the near future. You may be feeling tired right now, exhausted even, and you may be even fearing the worst. And for many of you, things will not return to normal. There will be a new normal. And so I'm here today to speak to you about cost cutting, cost containment, and restructuring in uncertain times. And I will provide you with some tips for each area and discuss the importance of developing a strategy to guide you in this work so that you can define the strategic posture of the organization to the future that is based on resilience and impact, and that this will help you navigate the organization during these uncertain times. I would highly suggest that you consider your task to be one that's broader than just cost cutting and containing costs, but to also consider this opportunity as one where you can reimagine the organization. Now, some of you don't have the luxury and time to do this. You need to cut right away. But if this is not you, you'd be wise to see this exercise as a cost-cutting and revisioning and reimagining one. Now, we all know that there are many driving forces of change that have shaped the nonprofit sector over the past 20 years. And now we have the impact of COVID to consider as well. And we know there will be other challenges in the near future in this post-emergency stage, including the possibility of austerity and new pressures on social purpose organizations to leverage technology and demonstrate their impact. And so using this period for strategic positioning, restructuring, and transforming your organization to be resilient post-crisis is vital. Now, for those of you that participated in the scenario planning and cash flow forecast webinar, this slide will look familiar to you. Here I have outlined that there are 4 stages of a crisis. The pre-stage, where you can see the emergency coming. The emergency stage, which is when the emergency has arrived. The acute stage, where we attempt stability and recovery. And the post-emergency stage. At this point in time, I think it feels as though we are toggling between emergency and acute phase. But one thing is certain, the post-crisis stage is coming, and that it is important to establish the strategic posture of the organization to that future, and that you focus as much as you can on positioning the organization for a resilient future. You can find savings by cutting and containing costs, and you can reimagine the delivery of programs and services, reimagine fundraising, reimagine operations and administration to put the organization on the strongest footing for the post-crisis stage. Before you start cutting costs, I encourage you to start by doing some financial modeling, including cash flow forecasting. Understand when deficits are forecasted, how much the deficit is forecasted for, and why the deficit exists is critical. Which revenue sources have been reduced and by how much? So important to forecast how long the reduction of revenue may last. Is it just for this fiscal? For next? For 5 years? Think about what revenue might look like leading up to the next fiscal year and beyond. What can you learn about and forecast in terms of changes in revenue from potentially from government, donors, intermediaries? Will the reduction in revenue last beyond this fiscal year? Are the reductions in overall revenue expected to be 10%, more than 20%? Now, if you listen to the other webinar, you heard me say that it doesn't take losing half of your revenue to put the organization at risk. Sometimes it only takes a drop of 20% to threaten the existence of the organization. An extension and a second step to cash flow forecasting is scenario planning for both the current period and into the near future. You can conduct scenario planning whether your organization has already experienced a reduction in revenue, or if the organization is anticipating a reduction in revenue from donations and corporate sponsorships in the future, as well as potential reductions in funding from intermediaries, and perhaps even expecting status quo or plateau funding or funding reductions from government in the near future. And remember that having a $0 increase in funding from government is not necessarily a good thing. Costs continue to rise every year, and so having the same funding every year will leave you with an increasing gap to fill each year. So when you conduct scenario planning, you will define what you feel is the best, moderate, or worst case scenario for the organization after analyzing and forecasting revenues for each of these scenarios. Your resilience strategy should align with the scenario that is deemed to be the most probable scenario for the organization. It might be the best case, the moderate case, or maybe the worst case scenario. That resilience strategy that you develop stemming from that scenario should include identifying the what and why, and the who and the how. So let me explain. If you're not desperate for just finding cost-cutting measures right this week, then you do well to frame this work in a strategy to anchor and position the strategic posture of the organization. The resilience strategy should contain well-defined statements that describe the purpose of the strategy, the problem or problems it seeks to solve, and the opportunity that might exist that will strengthen the organization's impact and resilience. And a resilience strategy is more than just a few tactics cobbled together. And so because it has the potential to be transformative in some way, the board should participate with senior management to articulate and have a shared understanding of this purpose, problem, and the opportunity. The purpose of the strategy should go beyond cutting costs and include building resilience and impact. Grab a pen and a piece of paper. Take a few seconds now to think about what's the purpose of a resilience strategy for your organization. Now let's talk about the problem statement. The problem statement should include the causes that have created the problem. Articulate that. Get clear on what it is. Include a description of the size of the problem, both in dollar terms, so how much money was lost overall and which sources, and also include the number of programs or initiatives that have been or will be affected. Include how the programs and organization will be impacted, and of course include what the consequences and implications of revenue loss will be on your service recipients, your clients, and the community. If you have not conducted scenario planning, I highly suggest that you do scenario planning first, as the outcomes of that exercise will inform this one, and it will include the information that you require to develop your purpose, problem, and opportunity statement, including the programmatic and operational implications for each of those scenarios. If you need guidance on how to conduct scenario planning and you didn't see the webinar, please look into ONN's Resource Center for the webinar that I conducted on scenario planning and cash flow forecasting in uncertain times. And by the way, you don't have to and you shouldn't limit the framing of your problem and your problem statement to just COVID. Chances are that your organization was already working on tactics and strategies to strengthen fundraising in light of the social deficit, for example, or leverage technology for programs and operations, or you're looking to strengthen the organization's ability to report on impact and outcomes, or all of the above. Take a few seconds now to think about the problem statement. What are the causes that are challenging the organization in addition to COVID? Grab a pen and start writing. Do you know the extent of the forecasted reduction in revenues? Do you know how many programs will be affected and how? What are the consequences and implications on the service recipients in the community? And if you don't know the answers to these questions yet, write down what you have to do to get these answers. What meeting do you have to call and with whom? Let's talk about the opportunity statement now. This statement should represent the organization's strategic posture to the future. This statement can be powerful. It will orient you from having a posture that only focuses on the here and the now, on the short-terming, on the cost-cutting, one that focuses on fear and perhaps reactive measures, to a strategic posture that will encourage you to cast your gaze outward and upward to the future. Remember that crises often change the way people approach their work. I've heard from so many executive directors in the past few months, many amazed at the adaptability, the agility, and creativity that has come from this period. I spoke with one executive director this week that told me that her organization has moved 50% of their programs to an online space by leveraging technology. And I'm not talking about meeting by Zoom or Google Meet, but by leveraging an online learning management system, for example, amongst others, within this short 2 to 3 month period. And there's no way, this executive director said, that she would have ever predicted that the organization could have done this within this short time frame. There is a survival instinct in many of us to adapt in light of a crisis. It's an instinct that thrives on adaptation, agility, innovation, creativity, and this leads to stronger business models, new business models, and a clearer sense as to the strategic purpose and positioning of an organization. And that's probably why the term "don't let a good crisis go to waste" exists. because there is a different kind of energy that is created as a result of a crisis, and this energy can be put to good use in thinking about the opportunities that exist for an organization. This opportunity statement is where you would talk about reimagining programs by leveraging technology, by analyzing and strengthening your business model, reviewing the strategic positioning of the organizations and its programs, and to realize upon a strategic opportunity. And so this exercise and these discussions need to occur with the board and the senior staff. Cost cutting and restructuring is not an exercise solely for the executive director, and it's not a task that you just assign to the senior accountant or finance staff member. It is a team effort in the end. For many of you here, your strategy will be transformative, at least somewhat, in some way. And so the responsibility of the strategy resides with the board. Now, the board may delegate part or full of its authority to the CEO. And because there are financial implications, the accountability for the development, the strategy, resides with the CEO, treasurer, and the chair of the board. The CEO will, of course, look for support from the senior finance management team and from staff. Usually, senior management supports the development of the strategy, and the other staff are consulted for their feedback and their input where that makes sense. Now, for those of you that are familiar with the RASCI level of authority matrix, you may have noticed that I used that to describe the levels of authority in those previous slides. It's summarized here in one table for you, and you can use this matrix to help provide clarity as to who's involved in the development of the strategy and what their role is. So for those of you that are maybe not be familiar with RASCI, it's R for responsible, A for accountable, S for supports, C for consulted, and I for informed. After you have defined the team and the levels of authority, you will want to identify who will be involved in brainstorming options and how, who should be engaged in how, and who, how, and when the strategy will be communicated. So in review, the key takeaways from this section include the importance of developing a strategy that defines the purpose, the problem, and the opportunity. I can't stress that enough. And also in identifying the roles and responsibilities, as well as the levels of engagement of each of the different types of people and roles. People need to know their jobs. After setting the framing and the visioning for the strategy and the resilience committee or task force that you might have, you'll be ready to embark on the process of cutting, containing, and restructuring costs that align with that most probable scenario for the organization. There are 4 tools for you to consider here. Cost cutting, pretty obvious, where you decrease or eliminate costs. Cost containment is where you minimize costs or minimize increasing costs. Investments are areas that you'll have to spend money and or time to leverage growth. And finally, restructuring, where costs can be restructured as part of a strategic process to reimagine services, spaces, as well as operations. So let's get started with tips on cutting costs. Obviously, this might be simpler but more difficult to do. Eliminating costs associated with lost revenue is critical, and there might very well have to incur some modifications in your staff positions and the roles. Something important for you to understand here and to remember is that some revenue that you have subsidizes a variety of costs. It could be subsidizing staff positions, it could be subsidizing the executive director's salary, the bookkeeper's salary, the ability to pay your lease and audit. And so it's important to know where the revenue sources are being decreased and how they were allocated before, so you know what's impacted. I'd highly suggest involving staff in cost-cutting ideation. They often have really good ideas. And in fact, sometimes those ideas have been repressed. You might hear them say, well, I don't know why we spent money on ABC anyway, when we could do XYZ. So obviously they might have a really good idea in terms of the program delivery piece in particular, where they can provide some suggestions for cutting costs. So include them. But essentially for cost cutting, you're reviewing every single expense line, all your invoices, to assess the extent to which the expense is required in its current format. Sometimes organizations are paying for things they no longer use. They've purchased subscriptions to technology programs or pieces, could be for their website perhaps, and they just kept it on auto renew. So this is a really good time to go back to all of those invoices to look and see what expenses you currently incur, which ones you currently need now. You may have needed them in the past, but you no longer need them now, and cut those costs, terminate those subscriptions so that you can realize some savings. But I want to highlight here, don't cut costs that enable and protect your organization and the sector. And ONN doesn't know I'm going to say this, but please, when you get down to looking at your subscriptions and the dues that you pay, don't cut the ONN. They're there to support the sector. And it's taken such a long time to have an intermediary fight for the sector in this unified way. And so while you're cutting costs, it's not actually advisable. The return on investment isn't good for you to cut ones that are associated with intermediaries that are there to fight for you. Let's talk about cost containment. Okay, right off at the top, do not cut back on insurance coverage. Do not cut back on a quality auditor. Don't go for the single shingle auditor because their rate is half the price, because you really need, in times of crisis, someone who really understands the sector in your organization. Don't skip on legal advice. These are important considerations. Your eye might go there first to cut these big ticket items, but that could leave you with more weakness in the future. So in containing costs, you want to analyze your purchasing, your leases, your storage. For example, a lot of organizations rent storage space with lots of file cabinets, even though they have then since moved to putting files on the cloud and perhaps don't need as much storage space after all. So this is where it becomes very important to involve the finance staff so they can go through all the contracts, analyze the purchasing and the leases, so you can find opportunities to cut and to contain costs. Maybe you don't need such a large storage space anymore because things have moved to the cloud. Then you can have a smaller storage space as an example. Perhaps there are assets that you can sell, assets that perhaps are underused or unused equipment that you used to use that you no longer use. I see organizations with the postage stamp machine and with leases that they renew each year, even though they've moved away from sending direct mail and use email newsletters instead. So every single purchase needs to be analyzed. Consider downsizing office spaces. Perhaps even a sale leaseback might be something that you want to investigate. And you really want to make sure that you're looking into your budget to ensure that there's no overspending on lines. It's really hard to contain a budget when there are overages on specific lines. So when you develop your budget, you have to be really quite sure that those lines are what you need and those lines are not exceeded. You may want to look at discount providers. The ONN has a purchasing program. They offer discounts on a number of things, including insurance benefits, printing, employee benefits. Many of you may know about TechSoup. They provide discounts on technology. So I would consider looking as much as possible for ways that you can actually find discounts and to contain the costs that you have. And here's something that might be controversial. Serve your service recipients based on the funding limitations you have. At a time like this, we want to help everyone and everyone. And I understand that. We all understand that. But that action actually might strain the organization because they don't have enough revenue to be able to service the service recipients. And so it's important that you have conversations with your funders, even if you've never had them before, to talk to them and explain to them how you have had increases in the demand for your services and find ways so that you can get additional funding to accommodate whatever that increase is. And of course, always ask all of your vendors for discounts. The next slide is about investments. Here you want to find investments that will leverage future growth. You want to invest in areas like things that I would call low-hanging fruit or the biggest bang. So what is a quick win in terms of an investment that you can put into place now that will generate an investment for the future? And what's the one thing, or maybe two, that is actually a larger investment that might create a larger, what I call a big bang for the future? Invest in technology that will strengthen manual processes and increase your revenue generation. Shift or increase fundraising and revenue generation to this new normal. Engage donors in the community. Allow them to provide some perspectives on how the organization can restructure and become more resilient. Invest in training and coaching that will support the transformation. Many of the new skills that are required or competencies you and your team may not necessarily have strength in. So invest in training and coaching to support that transformation. And continue to invest in staff positions that will leverage your strategic positioning. The last item here is tax recovery. I'm not sure which slide to put it on, but I put it on this one. Some of you may have used tax recovery specialists in the past. I would definitely consider calling up a tax recovery specialist and negotiating the best deal for you. So what they do is they look into your financials in terms of taxes that you have paid to assess if you have overpaid taxes. And if they do, they recover that amount for you, but they'll want a split. They'll probably start with 60-40, 60 for them and 40 for you. So here's where you can negotiate. Push them at least to 50-50, or if it's going to be 60-40, make that 60% be for you. I have, as an executive director, realized some savings from tax recovery. Restructuring. Now, I wish I could tell you that everything I'm about to say in 5 minutes that you could do simply and easily. But what I will do is just highlight some things for you to consider in terms of restructuring. To be able to restructure, it's important to understand the profitability and the impact of those programs on your mission. It's also really important to understand the true and full cost of your programs. That's how you understand the bottom line for each program, truly, if it represents a surplus, a deficit, or break even. Analyze the strength of the organization's business model. Reimagine staff, reimagine program delivery, your spaces that you have. Assess how technology can support the resilience of the organization. And have the exercises that look into what the strategic opportunity is, how the organization is positioned strategically, and what those options might be for community impact, for revenue generation, given this crisis. There could be a new way of looking at the organization given the crisis. And again, invest in coaching and training in any type of restructuring so that when you do that work, you do it as effectively and as efficiently as possible. And I can't leave this slide without talking about mergers and integrations. For some of you, cost cutting and cost containment, and even thinking about strategic positioning won't be enough. You might be impacted more significantly and need to have a bigger restructuring process to be able to find long-term or interim resilience and strength. Mergers are often very good for that, but you have to start the work early because there's quite a bit involved in partnering, in gaining each other's trust, defining the legal and operating model. And so if you think that perhaps you've had that 20% plus hit and you think that the stability of the organizations in question, start exploring conversations for mergers or for integrations of programs so that you can find ways to restructure the organization and keep the resilience as well as impact in mind. So in the key takeaways in this section, ensure that you're developing a strategic posture of the future that anchors the work in purpose, problem, and opportunity. Yes, you'll have to find ways to cut costs and contain costs, but don't forget the investments and the opportunity to restructure the organization. Find ways to leverage growth and restructure to be resilient and impactful in the future, and not just focus on cost cutting. And so in this webinar, I've highlighted the importance of developing a strategy to guide you in this work, including providing a guide on who should participate and how. I've also highlighted some of the ways that you can use to cut and contain your costs and restructure. But most of all, I hope that you take away the key message to see the crisis as an opportunity to position the organization for current and future strength, stability, resilience, and impact. By focusing on the solution for the future, your strategy will shift. It will take on a new tone. Once you focus the cost-cutting efforts to include your strategic posture of the future and have that on resilience and impact, new ideas will come to light because you would have allowed them to come to the surface in the way that you approach this work. So ensure that the resilient strategy positions your organization for the softest of all possible landings, and that it is mobilizing to rebound to the future, not only to be resilient in the new normal, but to leverage whatever opportunity you have to strengthen both resilience and impact. And don't forget to share your strategies with your peers and with me. I want to hear from you. I want to learn how you have been able to use this time for rethinking, stabilizing, transforming your organization for greater resilience and impact. You can find me on Twitter, LinkedIn, and by email, of course. And I look forward to hearing your questions now and over Twitter following this webinar. And so I'll pass it back to Melanie to kickstart the Q&A.
Wonderful. Thank you so much, Betty. That was such an informative presentation again, and we really appreciate your time and your expertise. We have some time now to have some questions for Betty. So if you do have any questions, please feel free to type them into the question box just on the right-hand side. Now, if you don't get your question answered, or if you have questions following the webinar, you can also join our live Twitter question and answer session by using hashtag NFPfinance and tagging Betty Ferreira and ONN. So one of the first questions we had, which I thought was really interesting, was about how when you were talking about reducing costs. So they were saying how they agree with you when you're talking about reducing office space, the use of technology, like things that you can cut costs are great. But one of the questions they had for you was specifically about bringing everyone in the room when you're having conversations about cutting costs. So if you want to have a strategic conversation and you want others to be involved, how do you have that conversation if that conversation may end up leading to discussing how not everyone in the room is going to be able to stay in the organization because of the financial situation?
You know, so I have been there on a number of fronts. In one in particular where I actually was the one that was impacted, and I suggested it myself because the organization had been impacted by SARS so significantly and for like a 2-year period where, you know, I had to basically say we need to merge and or be acquired in order to survive. So I understand what that feels like. No one wants to lose their job. EDs should have some sense as to where the funding loss is coming from. If it's a program that is funded by government, then they know what staff are associated. And obviously you want to have some tact and not include necessarily those staff in these conversations. But I feel that really, depending on the size of the organization, those conversations are best in small groups. It's hard when you have ideation strategies with large groups, which is why you see consultants often break people into small groups for smaller conversations. And so perhaps the organization that asked the question, you might have managers or directors that have staff that are responsible to that, that report to that director. And I would say those are the conversations that directors and managers should have with their staff about the areas that the staff know the most about, which is the programs and services. And to then have that conversation go up to the director level where they share that information and do even more brainstorming. So you definitely want to have some tact and not ask someone, like in my case, if what to do when to reduce costs or how to cut costs. But that doesn't mean that you shouldn't ask staff because you're afraid that revenue reductions might impact them in the future. Because the ideas that they bring to the table, as I said before, sometimes are like a light bulb going off where you realize, of course, we shouldn't have been doing what we were doing. We should be taking a different path. And so don't let fear of the future and the unknown prevent you from having these conversations with staff, because they have such a wealth of knowledge and they can truly inform this strategy. So hopefully that answers the question for the person who presented it.
Yes, it does. And just to build on that, you kind of talked about shifting the focus from now into preparing for the future and how this can be positioning. So how can organizations, especially right now during the middle of a pandemic, help shift their team's mindset from emergency crisis, kind of go, go, go mode into how do we plan for the future and recover from this?
Yeah, it's really hard to do that if you don't actually position it as a strategy, right? So if it's very reactive and piecemeal, you're going to find a very difficult, challenging time to have people pull together and think that you are actually asking them for a strategy. So you really have to articulate exactly what it is that you want from people. And if it's more than just a tip here and there, if it is about the possibility of transforming the organization, then that's how it should be framed. And that's why I spent so much time upfront talking about that piece, because I see organizations go about it reactively, and cut, and I understand that completely. But then they also expect a certain level of engagement, but they haven't communicated what the strategy was, what the problem is for staff to fully understand. Staff may not, of all levels, understand what the true breadth of the problem is, both financially in terms of the dollars or the numbers of programs affected. And then you have to articulate the opportunity. That's what brings the creativity of suggestions, of new business models, of revised business models. That is what brings all of that conversation and the ideation to the table. And so structuring it in a strategy will allow the organization to articulate and have a shared vision and understanding of what the purpose, the problem, the opportunity is, in a way that will proactively engage people to think. Because if you only ask them, where can we cut costs, you're going to lose a lot of energy and morale. You're not going to get the best out of people. But when you start talking about the opportunity, like I said, what is the strategic posture to that future, it becomes more exciting. It becomes like a fight that you have to win. It becomes a creative exercise that inspires innovation. And at this opportunity, as I said, when people are going through crisis, their minds are working almost overtime. It's good and it's bad, because that's oftentimes where great ideas come from. So I would leverage as much the building of a strategy, clear, well-defined statements of the purpose, the problem, the opportunity, and engage staff in facilitated conversations to bring out the best ideation possible. to strategically posture the organization to a resilient, impactful future.
Thank you. And so I guess when we're talking about this, kind of goes into another question someone asked, which is, so you're talking about the strategy and how you can use that to reframe the conversation. And what they were asking is, do you have any tips for creating that strategy when you know that you do need to cut your core services? So you mentioned, if you have limited funding, that it is controversial, but you should be at some point limiting the amount of service delivery you do. Do you have any tips for that?
Yeah, so this is a huge area that is really custom, right? So it depends on what in your scenario planning you have defined as the best, moderate, and worst case scenario, and what the probable scenario is, and engaging people on what that is and bringing that knowledge, and then finding ways to if you can, build the revenue, or like I said, you'll have to restructure. So the process to have the ideation, I did mention on the beginning of that slide, it's one slide, but there are a number of exercises and considerations that executive directors and boards have to put in place to be able to bring out the best in people. In terms of talking to your funders, I'm always surprised at how few conversations executive directors have with funders. So this is not the time to continue the silence. You absolutely need to engage your funders. They, like your board, need to understand exactly how you're being impacted, why you're being impacted, what the nature of that impact is, because they can be your ally. They can have more perhaps relaxed reporting requirements. And so engaging your funders is a method to be able to increase transparency and awareness, but also to get their input is vital. Hopefully that will begin to help in terms of providing some tips, but I think that that's the biggest blind side that I see, is that people are not engaging their funders significantly in a significant way and bringing them into the conversation. And also, again, the fear of having staff involved in the ideation.
And if you are talking to funders about, the risks or the challenges you're facing with finances, and you are planning to cut costs, what is the timeline, or is there, a general timeline or approximation that people see the benefits from reducing their costs? So if they do have a strategy where they decide they're going to limit the amount of service delivery, or they cut costs through their lease, do they see those benefits immediately, or is it something that takes years of cost cutting to reap the benefits from?
Well, sometimes, sometimes the big hits, like your big savings, could take a little while, because you might be in a lease agreement, for example, and it could be photocopier machines, postage machines, or the space that you're in. And I tell you, doing restructuring work, the leases are the hardest part to actually renegotiate. It's the hardest part. And so hopefully you'll find a term that is sooner than later, when you can just terminate the agreement. You might have to wait 6 months, but make sure that these agreements are not on auto renew. I mean, this is the critical thing. We do so much on auto renew that we may not even realize that something is being renewed now for a 5-year term. And so getting in as soon as possible will help to realize the savings sooner than later. But anything connected to a lease may take longer, and probably will, it's going to be very challenging to get out of a lease of any kind. So you may have to wait out that term, right? You may have to wait till that term expires. But with other things, you can get some immediate significant impacts. When I've used discount programs in the past for insurance, general insurance, health insurance, EAP program, I think it was 2001 when I was in ED, I had a $40,000 savings just for implementing those discounted programs, and it was immediate. It started in 60 days, I think. So not terribly immediate, but 60 days, which is fantastic. And so that's a huge amount of savings for 1 year. So it really depends on line by line and how structured, each of those expenses are. This is often why some organizations, instead of paying for a full year on services, and so this is something you may want to consider if this is you, you pay a little bit more, but you pay month to month, Because if you're not sure you want to have that service in the long term, then if you pay month to month, you can cut any time. So there's going to be a balance between, do you take the month to month subscription, or do you take the full year and realize a discount in the end? And I'd say at that point in time, what you're looking at is, how important is that service to your business? How essential is it for you to operate? If it's essential, well, you'll want the discount. If you're unsure, because perhaps it's leveraging you into new fundraising space online or a CRM that you're trying out, go month to month so you can cancel if you need to cancel. So some of the cost cutting will definitely see an immediate response. Like you'll see the discounts come in and see that there's some relief there, whereas others will take longer. And so it is the strategy in the end that when you pull together, it becomes the next scenario planning, where you can say, you know, here's all the things that we anticipate that we'll realize savings on, or we can contain costs. And what does that impact show us? Did we get to the point that we needed to get to ensure that the budget is balancing? And then you'd have to go back again if it's not enough and say, well, where else could we go to? And here you may want to think of things like even leasing staff. I'm not sure if I highlighted that bullet now that I think of it, but sometimes organizations can't afford staff right now, but they don't want to let them go. But other organizations may have had to let staff go. And so you can lease your staff over to help that organization for a couple months, perhaps while they restructure, or maybe for a couple days a week. Get some payment for that, and therefore your costs are reduced for a little bit. So you can look at things like that for seconding staff or leasing staff out, as I said, that could actually provide some immediate benefits now. And that's a line where you would expect that you wouldn't necessarily unless you were cutting completely. And so I'd look at every single line and not say, well, this one can't be touched, because there might be a creative opportunity to look at those costs and find a different way that you can still retain staff, still retain your space, but find other ways to subsidize those costs.
Thank you. And I guess for the last two questions I want to ask you is less about the cost cutting and more about the preparing for the new normal. So one of the things that I think stuck out for a lot of people was talking about how this may be the time to invest in technology, to invest in retraining your staff who maybe aren't familiar with all the different platforms, for example, virtual programming, that may be a new reality for staff. How do staff who don't have that technical expertise, or teams that don't have that technical expertise, go about creating a strategy on what do they invest in, especially in a time where funding is so limited?
Yeah, so there's a lot in the digital virtual space to take in. I mean, you can completely be overwhelmed by all of the options. And so depending on, what the space is that you're looking for, I would find, if it's technology in this example, sites that have reviews and comparisons to help you understand, what those services are about and how they can help you. And look at several options within a very small range so that you can contain the amount of information that you're going to have. So looking at review sites and comparator sites are really important. And I think really important, because you cannot necessarily hire staff people, is to look for experts in the field who know this work, who have spent thousands of hours honing their area of expertise and can synthesize something very quickly for you and point you in the right direction. I mean, in that, you are saving a ton of time, anxiety, stress, and you're getting instant help and instant support and coaching and mentoring. And so that's one of the main reasons I included that on a couple of the slides, because it is a little overwhelming. Transformation is different than operating strategically. It is just different. And because it opens up all these different doors, you want to ensure as much as possible that you're not overwhelming yourself, stressing yourself out, and taking in too much. And that's where an expert can help you, whether it's to direct you or to analyze something and provide some recommendations. Now, I know from the 2008-2009 crisis that as a consultant, the consulting contracts changed dramatically, and I'm expecting to see that here now as well, and it's already started, where more and more executive directors and CEOs look for coaching versus hiring a consultant to do, the work. And so it might be that that's actually something that is so much more cost effective, is to find a coach in the area that you're looking for and have their expertise synthesize all the information and bring it to you in a way that you can use and will enable you to move forward. I mean, I know that I'm a consultant, and I don't want to, I'm not saying you need to hire me, but when I've needed a consultant or a coach and I go to them and they crystallize all sorts of information, they synthesize it and give it to me exactly how I need it in a small fraction of the time, it's worth the investment. So find ways that you can maybe get funding to help you hire, someone, or others that are doing it that are your peers that can give you information about how they have actually sought information or managed, restructured, so that you can find that synthesized information that will help you instead of getting overwhelmed by everything that's out there.
Thank you. And the last question to wrap up the webinar is about the new normal and more of your personal opinion. What do you think some are the low-hanging fruits you talked about that during this pandemic and beyond that maybe be positives and opportunities for us going forward?
Well, I think we know there's technology and the technology and data and moving to digital were already forces that were driving change. The new normal, inspired by COVID, has only accelerated the need to go with digital, the need to have data, to understand your clients, to understand the services and the supports that they need that are best, that impact them the most. And so what I see in the new normal is an accentuation of the trends that we had before. And in fact, what we're seeing is that I think what's happened is that curve to adaptation of technology and so on has probably been accelerated by at least 5 years. I mean, organizations that were considering doing a digital online learning management system in a few years got it done in a few months. So that's an example. So I think the technology across everything, from your programs and services, having some kind of integration of technology, which for me is separate than data. So data and technology are two different pieces. So technology, data, and the need for data to really understand your clients and the impact of your work, those two things in particular are being accelerated at this time. The other thing that's being accelerated and will absolutely be required moving forward is adaptability and agility. And so if you have a 5-year strat plan and you're looking at continuing it as things are normal, I would say take a look at that strat plan again. Look at it in terms of the new normal that we're moving into, the impact of COVID, the impact of having a virtual online presence, the need for data. Understand that it is really likely that we're going to go into a period of austerity. The money flowing out is not going to stay at the same level. And so keep that in mind in terms of the financial piece and the government's need then to look for programs that are automated, that use technology, that have data and can demonstrate their outcomes. Because I think funding is going to shift pretty strongly to organizations that can do those things, that can leverage technology and have data to prove their impact and their outcomes. So that I would say would be the most important thing to look at now, is look at your strat plan with the new lens of that new virtual world of data, technology, resilience, and adaptability, and find ways where you can reimagine your strategic plan.
Thank you. We'll make sure in the follow-up email to send some resources as well about how to leverage data. Thank you again, Betty, for your time. It's always amazing having you on, and Thank you everyone who participated. We hope that you're able to use this information to really help contain your costs during these challenging times. Now, we would love for you to stay connected with us today. We know that we didn't get to all your questions, so if you want, you can join us on the live Twitter question and answer session. That's going to be on Twitter in just a moment, and we'll make sure to answer all your questions there. If you're not on Twitter, I'll write my email in the chat box so you can email me your question directly, and we'll make sure to answer it as well. Thank you for joining us today. We look forward to keeping in touch. We hope that you join more webinars, follow us on social media, and always reach out if you ever have questions or if there's any way that we can help. Thank you so much and have a great day, everyone.
Bye-bye now.